Michael Listen here. So I want to quickly share a strategy with you, an indicator-based strategy with you that will help you trade boom and crash profitably, just catching 20 to 30 to 40 pips at one go. That's if you follow all the instructions I have outlined or have laid in that strategy. Okay, now I like to also let you know that price action is okay. Learning ICT and smart money concept and all of that, maybe chart pattern based models of trading, all those are amazing and it works. And I want to help you to understand that indicator works also. Yes, indicator lags, but if you know how to use it, if you follow the video, the strategy video that you'll be watching after now, you understand that it really works. Okay, all it takes is for you to be able to interpret it and understand how to, apply it. And then secondly, you don't have to be greedy. Now remember that trading is a business. It is not a get rich quick scheme. That's the problem with us. We are always in a rush. We are looking at, what is happening on YouTube, big, show off, and then we get pressured, and then we get into the market, we put pressure on ourselves, and then we lose money. It shouldn't be like that. It's a business and you have to take it really slow, all right? You are not in competition with anyone. You are just trying to, do something good for yourself. You need to gain mastery and all of that. Of course, I know a lot of ICT concept and all of the rest, but I'll be honest with you, strategy still works. I mean, the indicator still works. I have trained people in the past years who are still holding on to indicators and they're still doing well. I know some very long-term traders. They've been in the industry for more than 10, 15 years. They're still using indicators to trade. So if you complain that the indicator is less, it's because you don't know how to use it. The most important thing is whatever system you understand, if you're making money with it, why not? Stay there, improve on it, and keep making your money. All right? We are not here to improve. We are not here to impress anyone or to, compete with anybody. We're just here to make money. And so if you want to make money with trading boom and crash, I have been trading boom and crash for the past 5 years. I have developed a lot of strategy around it. I've done a lot of teachings around boom and crash. This video is going to help you, provided you're not reading and you follow all the instructions. And I'm also open to private mentorship. I am here to help you succeed. If you have any question surrounding Forex or whatever, just reach out to me. I will not be responding to comments on this video, but you can go to the description part of this video and then you will have a link to the inquiry group on Telegram where you can ask questions about the strategy you'll be watching shortly, and then for clarity where you feel deficient. I'm here to assist you. Don't just be greedy. Follow the instruction, ask for help, and of course I will help, and you'll get it. You'll get the required help. Thank you very much. Watch the video now. Okay, welcome here. So I want to show you a simple indicator-based strategy that you can use to up your game trading crash and burn. And like I said, indicators are not useless per se. I use them and I still know a lot of the other things that are taught everywhere. So, but for you that wants to trade, quickly and make money and maybe does not understand how to use price action and the rest of other stuff with crash and burn, I just want to show you what you can do, and indicators can help you take trades a bit accurate. All right, trading crash and burn. So let's get right into it. First, there are basic things you need to understand about this particular strategy. Okay, so it will be totally wrong and a loss for you to say if you have no understanding at all of how to determine a major market or major trend direction. Okay, so there are basically 6 things you need to do to understand how or to be successful basically with this strategy I want to share with you. So number 1, you must have a little understanding of major trend direction. You have to understand if the market is majorly buying or majorly selling. And of course, you can do that from higher time frame. So I'm sure you should be able to know that. Number 2, you should know how to set up the indicators properly. all right, using all the parameters that is required. So that's also very important. And then number three, you must understand what the indicator represents and what they do. All right. So I'm going to explain all of that. And then number four, you must wait for the perfect setup before you engage. Because one of the major problems with traders is always wanting to take a position. They just want to take position. So patience is a big miss when it comes to trading for so many of us. We don't have the patience to wait for the perfect kind of setup, whether it is indicator based, whether it is price option, whether it's ICT, whatever you want to call it. So you have to learn to wait for the setup to come. As soon as you see that particular setup, I think it is good to you're going to be good to go. And then number five, target 20 to 30 pips at one go. What that means is when you find that perfect setup, don't want to go up everything at once. 20 to 30 pips is fine. And then you can leave it at 5 to 10 pips stop loss as well. And then number six, repeat the process and you're good. So let's start with the first one. Have a little understanding of major trend direction. So let's look at this crash 300 that is in front of us. If you look at this, if I go to maybe H4 and maybe I go to daily, for example, you will discover that this market has been buying for a while. It buys on daily, higher highs, higher lows, higher highs. So it's creating higher highs and higher lows. So this is like a bullish trend. So the trend is bullish. We know that. Although it has gotten to a point of some kind of resistance level right now. But the most important thing is that you know that this market has been buying. If you come to a smaller time frame like H1, you discover that it's also buying, creating higher highs and higher lows, higher highs and higher lows, just like that. So you can comfortably say that this market is actually in a buying, in a bullish direction. Okay. So that one is observed. Okay. So let's just see how we can apply this principle, this strategy, and pick a few drops or a few pips and then gradually grow our account. So number two, know how to set up the indicators. So that's what I want to do now. I want to teach you how to set up indicators. Like you see, this is it's an empty chart. Not a single indicator is added yet. So I want to show you the indicator I use to build up this strategy. Okay. So the first thing you're going to add up is moving average 10. So you're going to add moving average 10. So this is moving average 10. We're going to need that. So moving average 10, it's simple, moving average 10. And then I love using 3 pixels. So you just choose red color and that will be all. And then when you come here, you discover that the moving average 10 is added. The red color is added. Maybe I will have to change the color to maybe a little brighter red. I think that's better. And then after that, we'll go to the second moving average, and that will be moving average 23. Okay, so stay with me. Moving average 23, and that is exponential. And then I would choose color blue, right? And then 3 pixel, and that's it. So we have the blue moving average. The last moving average in this section will be moving average 200. Okay, so I'll take moving average 200, exponential. I'll choose black as my color, and I'll say done. So we have, see that? It looks crazy, but just pay attention. All right. So now we've added the 3 moving averages. So we need to add the RSI, and that will be indicator under the indicator window 1. So we come here, we tap on the F plus because at this time we are done with that. So I want you to know the F plus by my top right is what I'm tapping now. So I will now scroll down to oscillators. Under oscillators, I'll come to relative strength index, and then I will tap on relative strength index. Basically, in your own, if you're doing this for the first time, you're going to have period 14, which is the default. And these levels are just going to be 30 and 70, like you can see. So what you're going to change there, you're going to change the 14 to 5. And then you come to the color can be whatever, can be the same color. You come to levels, and when you come to levels, 30, 70 will be normally what you will see. You now add 90, 80, 20, 10. Just add it, okay? You may decide to put the description or whatever. It doesn't change anything. So put it up like I have done, and then you tap done. When you come back, you must tap done, and then you will discover that you have the moving average, okay? Just like you've seen. All right, perfect. So the next thing is we're going to add, um, let's see something. Let me check the moving average. This is moving average. Sorry, relative strength index rather. Um, okay, I like to use, I like to use, I like to use black. Okay, I love black. Okay, so that's my own color. I love black. And then let's get to the last one. That's moving average. So under the indicator window one, we're going to add moving average. So you see, this is where I'm tapping the F plus under the indicator window one, or by the indicator window one. So I tap on it and I go to moving average. Here, I'm going to change this to moving average 5, change it to exponential, and then the color is going to be blue. Choose blue again. And then that will be all. And I think we're good. Okay. So you see, we have that. So that's all you need. Basically, that's all you need. But remember, so I'm just going to explain what this moving average does. Remember that rule number one, you must have a little understanding of the major trend. Just know what is the major trend. Is it bullish or is it bearish? And you can make that judgment from your higher time frame. Number two, you must know how to set up the indicators, which we have just done now. Number three, you must understand what the indicator represents. So that's what I want to explain now. So first, the rate moving average is basically what I will call trend determinant. It helps you to determine trend. It's like a trend liner. It guides you. If you check, it lines. This is a bullish move, and you will notice the moving average, the rate moving average is just lining, below the lows, towards the lows of the candle, of the bullish candles. And then the blue one is the extended, or what I'll call the expanded, trend liner. It also, so that one shifts away from the candlesticks completely, but it's also a trend liner. And then the 200 moving average, basically, or what I will call conventionally, it serves as both resistance and support depending on where you meet it. But then, in my opinion, and from what I've observed, is also a strong trend confirmation. It's a strong trend confirmation. So whenever there is a crossover or there is a layover like this, it shows you that the trend is going to be very strong, most especially if you encounter it on a higher time frame. So for example, the black 200 EMA has crossed over the blue and the red. At this point, that was, or that's why we're having this strong bullish push to the upside in H1 time frame or on H1 time frame. So that's it. Number four, you wait for the perfect setup. So the question is, what is the setup? You need to understand what the setup is. So I'm going to explain the setup now. I don't intend that this video is long, so I want you to pay attention. Remember what I said in number 5? You target 20 to 30 pips and then put 5 to 10 pips stop loss. So let's look at it. So the first thing for you to be able to understand how this market works is that at this point, see how it is. It doesn't look very well. You look confused. So let us assume that you're looking for an opportunity. And then secondly, when I said you have to understand what the indicator represents and does, I've told you what they do. Now, I want to explain to you what they do and how you can use them. I want you to look at how my screen is. Look at this arrow. I will have to circle this so that you will understand. Okay, if you look at this arrow here, you see that arrow? That arrow is is vertically aligned to the current position of this candle, the active candle. Okay, that small arrow that is pointing. Now, many people make this mistake. So I want to show you that now because that's where the problem is. So if you look at, I think, Okay, very good. Now, if you look at I'm trying to push to the backside, you discover that it comes up with a broken vertical line. I'm sure you can see there's a broken vertical line. So, so that's the thing. So if I want to adjust this thing to, that's to say, if I go back now, what I'm doing right now is I'm trying to push it to my, left, but it's not going because that is where I wanted it to stop. Now, if I want to move it, and the point I'm trying to make is that you must create line. Let me show you what I mean. You must create a line. There must be a gap between here. Okay, good. There must be a gap between the current, okay, very good. So you see, that's the point. I want to show you something. It's about the placement. This is important. You see that gap? You see the distance between, that's the current distance. You see that? The distance between where where it is actively is, the current candle, and the last line that brings up the price palette. So if you look at it carefully, you see the gap, almost like 1 inch or thereabout. So you must have that kind of gap. But you see, the problem with other people, look at what some other people do. That's how their own chart is. You see that? That's how their chart is normally, which is very wrong. Your chart cannot be like that. I'm telling you, as far as this strategy is concerned, your chart has to find a way to make sure that this small, arrow is around this point. At least it should be like that. Okay. So I'm going to delete that. So it must always be like that, such that if you're pushing to the, to the left side, it will not move. It has stopped. It is fixed here. But you can rather go forward, go forward, as in, I don't know. I am pushing this now to my right, and that's why the thing is going back to my history, to the past. So, but anytime you want to, you're swiping, I'm swiping to the right now, but when I swipe to the left, sorry, I'm swiping to the left now. If I swipe to the right, it takes me inside. It hides the candles. So, but if I swipe to my left, it reveals the candle. I know you understand what I mean. So now that placement is important. Okay. When that is done, now I want you to understand something. I'm going to come to 5 minutes time frame. First, I understand that this is a bullish trend, so I'm not going to wait for a long sell because this crash drops and then it buys. So it drops huge and buys gradually. So what I'll do is I'll come to 5 minutes time frame, and then I will squeeze my screen to zoom level 1. It's as simple as that. Now look at the trick. Please pay attention. This is where the thing is. Every time and any time you see this, how do I make you see what I want to show you? Good. Anytime you see this happen, you see that? You see that layover, that crossover. Now that black line there, or the black indicator or whatever, is actually the RSI. While the blue one is the moving average 5. Now, anytime you see that moving average cross over that indicator around 90 or 80, listen carefully. You can backtest this. And if you have questions, you don't understand what I've explained, or you're still very confused, below this video, go to the description. You're going to get a link that will lead you to me, so you can ask your question for more clarity. Okay. Now, but I want you to just pay attention, because I know some of us, you don't have the patience to use price action to trade crash and boom, which is very easy and very easy. But if you want to use indicator, for some of us that are addicted to indicator or are used to indicators, please, you can work with this. It's going to help you. It's not rocket science. It's not difficult. So anytime you find this kind of setup, this is what we call the perfect setup. Just take out 20 to 30 pips and you're out of the market. Just be patient. It's going to get it done. So what does that mean? Anytime you find this thing at this point, there must always come two, not one. They must always be together. And then there must be a crossover. It means that the market is going to drop at least 20 to 30 pips. So let's see it. Okay. So I want to measure 20 to 30 pips, maybe from here. And then there's another thing I'm going to add to it. Okay, it's not showing me. So let's even assume that you stopped at that point. So let's go back to where it started. You see, this is 141 points. We crash 300. If you use one lot, it means you're going to make $141. But let's assume you're even using the lowest lot, which is 0.5. you know that that's about half of that, which is going to be about 80, is it 80, 70? Yeah, about $70 or thereabout. And you know that you can still reduce your 0.50 to 0.10. It's called partial closing. Open with 0.60, immediately close 0.5. You will have 0.10 left. And with 0.10, if you hold it on from where it is to that point where I drop, you'll make $14. Now that's the thing I've been saying, or I just finished talking about. So sometimes it's not how much money you want to make at a time. If you make little consistently, every time the setup appears, you take small money, and then you build your portfolio gradually, and you are not in competition with anyone. All right. So that's one of the things. So there must always be this situation where you see that thing must happen. That thing must happen. If that thing does not happen, don't worry, it's not your trade. So you pick it here. And then another thing is that sometimes, please pay attention, sometimes here, this level, you're going to see price action. If you don't understand that, just do a bit study. Price action is that you're going to find some kind of, maybe kind of resistance, you find some kind of maybe a rejection around that kind of that area. Yeah, even with 5 minutes time frame. And then the market will definitely drop. I'm going to show you a few examples across the boom and crash that is listed here, and then you can do your back testing. And please, if it works, come and let me know. All right, let me know. Make a comment on the video, and let me know if it was helpful to you. And if you still missed it, please find a way to reach me. I want to see how to help you. And then that is just for this particular strategy. Then secondly, I want to show you something else very quickly now. So that's that. Now, by the way, why did this thing not go this very far? Remember, the major trend here is bullish, and that's why we couldn't stay for long. And I said just take 20 to 30 pips. Why did I even say so? Is because you are going to trade crash 500 if you want to, maybe crash 1000. But crash 300 is more volatile, and so a little drop, it can be very significant. So let's go to boom 500, for example. Remember the rule? Remember the protocol? So let's go. So one of the first things is you go first to a higher time frame. You're trying to find where the market is going, if there is anything that gives you an idea of where the market is going. All right. So now, if you look at what is happening here, you will discover that, okay, now if you look at what it is going on, this market has been selling, and we can say that the market major direction has been a sell. And we can, okay, for us to find this kind of a perfect setup. So what I want us to do is, okay, first we come to daily. And now remember that there's going to be a crossover of the 200 EMA and the blue and the red. When this happens, there's going to be another sell in the future. So it may push up a bit, but I want you to know that this is going to continually sell. You can check this in the next maybe 1 week and 2 weeks, and then come back and make a comment on the video. So I'm not saying it may buy up, but definitely when a cross takes over or happens, it's definitely going to sell. I can tell you that for sure. So now see what happens. So now that I know that this thing is a possible further sell in the future, so what I'm going to do is I'm going to come here. Maybe I'm going to come to 5 minutes time frame. Now, when you look at 5 minutes time frame, I did not find anything that suggested what I showed us. Although there's a bit of price action, okay, because we saw, as I squeeze this screen to this point, the fact that this blue got to 10 is an indicator that this is going to spike to the upside normally. And then secondly, you discover that there is a kind of support here. So there's a possibility that price was going to go up, okay, because of the blue. But since there is no crossover, I would not have personally, maybe I would have taken this trade if I was the one. But when you don't find that crossover, don't worry, let that one go, okay? Wait for another opportunity. Now, let me show you a typical example of the crossover on 5 minutes time frame. Please take note, 5 minutes time frame. Now, this is a typical example. Where is it? Okay, so this is a typical example. There's a crossover here, sorry. There's a crossover there. It crosses over. The both of them are at 10. It crosses over. And then that was where we had this. Piam, that's a lot of money. You don't need much. Remember what I said? 20 to 30 pips. you're good. You just walk away. Now I'm going to show you something else. But if the major direction is actually a buy, okay, like in crash, like in boom, 500, the major direction is a buy, and this was just a retracement. For example, this was just a retracement. This was a retracement, and then you spot this kind of thing. Oh, you can even allow it to go for 100 pips. You don't have a problem. All right, because the major time frame or the major trend is in alignment with the 5 minutes. But in this case, that's not the case. So we don't have that kind of situation here. Okay, so let's make progress. Let's just look at some other aspect. Now this is boom 1000. Okay, so first we have to go to daily. Remember why we're doing that is because we want to see where the market has been going all along. So we can tell you that okay, this market has been buying all along. Okay, so we had a support at this level. Okay, it was a perfect support at this level, and then after that price begin to pump up. Okay, so market has been buying. Okay, market has been buying, and at this point again price is respecting this level. Okay, so this comes as a support, I mean sorry, as a resistance level. So but we don't know if this is going to continue to sell for long. So what do? In order for us to pick our either a buy or a sell in any case, now there is likely going to be a crossover also, if you can see what's going to happen here. So we have, if this level does not hold, if this level does not hold, okay, so there's a possibility, a stronger possibility, at 80% chance that price is going to keep pushing up. So but how do we do that? How do we know if that's going to even happen? So what I do is okay, so if you check what is happening here, this is okay, so if you check, there was a crossover, so price is definitely going to go keep buying. So these are one of the kind of trades you can check in the next 1 week or 2 weeks and see what happens. So but this is what I keep doing. I go to M5. Now I want you to see what happened currently. Because of the position of my chart, this moving average 5 is already at 90. All right, so if, and there is a lot of price action with 5 minutes time frame. Okay, there's a kind of price action. There is something that I've seen I can't explain right now, and that is what even gave this kind of. Personally, I would have bought. I'm sorry, I would have sold this market as soon as I saw this happen. It's not the perfect setup. Okay, okay. If you have, remember what I said, you have to be patient. I would have taken this trade personally. Okay, I think I've seen that crossover here. You can find it. Let me show you. Look at that. That's a crossover. It crosses over, and then just have a little patience, and then price will come to you. You know, will make your 20, 30 pips for you. And then this is another example I want to show you. As soon as there is a crossover, just expect that push to come down. It has happened here. I'm sure you can see. Anytime there is that crossover, whether it is in the direction of the trend or not, expect price to do its thing. I'm telling you, I'm showing you a very serious secret here. So I know you want to see my results, but don't worry. When you want to see my result, come to the inquiry group. There are a lot of results there. You'll be amazed. So what's the point? The point is when there is a crossover, whether you are buying crash or you're selling boom, just go in 20 or 30 pips and then get your thing and get out. Don't waste time. Don't waste time. Now, this is another example. This is even for a sell, and it works all the time. See that? There's a crossover. As soon as it gets to that level, just sell. That's a lot of money already. You work out confidently. You don't have a problem. Confidently. Just wait for that crossover. Make sure it is very clear. As soon as the crossover is clear, you know, that is the moving average 5 overlapping on the RSI, you have no problem. And then if you understand a little bit of price action and there is price action around that place where that thing took place, you are so secured, you don't have a problem. So these are the stuff, and then this is how easy it is. It's very sweet, very sweet. Look at this crossover. As soon as it crossover, you're good to go. Then price goes up. All right, so that is what it is, my people. So let me just go to maybe crash 500, and then quickly we just wrap this up. All right, so let's see what happens with crash 500. Remember the rules, don't forget. Number one is what? Number one is have a little understanding of the major direction of the market. Number two, know how to set up the indicators, which I have shown you. Then number three, understand what the indicator represents, which I've explained and does. and then wait for the perfect setup. So what you do is first determine where the market is going. This is a clear bearish market. Market has been selling. You come to H4. This has been a sell market. Market has been coming down, selling, 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 selling. All right. So there was a crossover at this point. From there, market has been selling, selling, selling. Okay. So there's also a possibility that price is going to keep going down. But then that's not all there is to know. So you want to find if this is going to keep buying or this is going to keep selling. So I want to see. Although this looks to me like more of head and shoulder kind of stuff, inverted head and shoulder. So we have these points, we have here, we have here. Okay. And so the neckline comes up around this area. And then there's also a very clear trend line running down there. So we may see a push up maybe in the nearest future, but that's not all that. We are not looking at long term. We're just looking at short term. That's why we're doing the 5 minutes. So if I come to 5 minutes, I want to see what happens here. Okay. So remember the market is selling down, is trending down. So we can pick a buy in this kind of situation, except we see that our crossover or that perfect setup. When we find that, okay, look at it here. Look at that perfect setup here. You see that? As soon as you see that perfect setup, you just go in. Just that face push down is a lot of money. Let me show you what that is. Let me show you what that is as I round up. So it dropped to this point. So you see, that's 32 pips. So you can pick 32 pips and then you walk away. If you use one lot, that's 30 something dollars. If you use 0.5, that's about $15 or so. And if you have 5 of those kind of setup in 24 hours, just mark them, just time them. And by the way, there is an app that can help you, catch this kind of setup. You did not hear that. I said there is an app that can help you, anytime this kind of setup appears, it gives you an alarm. If you need that kind of thing, get to me. Make sure you reach me. Come to the inquiry group and ask questions. I'm going to help you. And by the way, I have a course, an extreme, very deep teaching on crash and boom. And that is the SPT course. It's available on the different platforms. You can buy them on Digistem, on Expertnet, on Seller, on Offcam. Just look for SPT 101 course. And then if you want to get the course too, you can also reach out to me via the inquiry link. It will lead you to a Telegram group where you can make further inquiries. And also, if you are interested in getting your funds managed for you, indirect management where we have to trade and you get to see our trading, also reach out to us. We're going to see how we can help you. And then last but not the least, if you need private personal mentorship, reach out to me and we're going to help you. I don't promise you nothing. All I'm telling you is that if you follow the instruction, you'll be successful. And if you don't give up, you will get it done. I wish you the very best. Please ask questions. And then I want to see your comments on the comment section. And then if you've been my student all these years, remember that we are still growing together. No matter what you've learned, it is not enough. Keep learning, keep growing, and keep striving. I believe that you will succeed. And this is to help you. Please practice this, backtest this, and give me your feedback. I'll be waiting to hear from you. Thank you very much. And cheers.